Hello everyone. Welcome to Toronto Center's live webinar. My name is Demet Çanakçı. I am a program director at Toronto Center. I'm also leading Toronto Center's community of practice on financial inclusion and gender equality. If you would like to join our group, please send me an email. Today we are hosting with Stephanie Oula as part of our community of practice events. Today's theme is the importance of gender data for women's financial inclusion. We will have a Q&A session once Stephanie finishes her presentation. You will have a chance to ask your questions along the way. Please type your questions on the chat box and make sure that you address your questions to everyone. I hope you will enjoy the webinar. Now it is my pleasure to introduce you our guest speaker, Ms. Stephanie Oula. Stephanie is a senior program officer with Data2X. Data2X is a gender data platform housed at the United Nations Foundation, where she manages partnerships on women's financial inclusion data and gender data and sustainable development goals monitoring. Stephanie, thank you for joining us today to share your knowledge and experience. Over to you.
Thank you so much, Demet, and hello everyone, and thank you so much to the Toronto Centre and the Community of Practice for having me today. It's a pleasure to be connecting with you, and I'm really looking forward to the discussion after the presentation. So yes, today, as Demet told you, I will be speaking about the importance of gender data for women's financial inclusion. At Data2X, I manage one of our technical partnerships called the Women's Financial Inclusion Data Partnership, or WIFID. Here you will see the partners that are in the WIFID partnership. And what we do is we seek to improve the collection and use of sex-disaggregated supply-side and demand-side data to accelerate women's financial inclusion. And what we have been primarily focusing on, and the partnership, really sort of kicked off in 2016, are sort of a few key components. One is global advocacy and awareness raising. So, continuously making the case that gender data is a valuable and necessary sort of investment and first step in terms of understanding and improving women's financial inclusion. We have also been doing work, which I'll speak a little bit on in the presentation today, on documenting national experiences and best practices from countries where they have pioneered either the collection or use of sex-disaggregated supply side or demand side data for women's financial inclusion. And relatedly to sort of the national level exercise of documentation, I would say, we also, with the leadership of the Alliance for Financial Inclusion, who's in the partnership, worked directly with the Bank of Zambia and the Central Bank of Egypt on two projects last year that were really about building sex-disaggregated supply-side data frameworks with both of those regulatory institutions. And then finally, we are also working on harmonization, and specifically that is harmonization of a core set of supply-side indicators and definitions that's related to sort of women's financial inclusion. And as part of our work, we also developed a global gender data strategy with McKinsey & Co. And what we tried to do in this strategy was really outline and understand sort of the theory of change, for gender data and women's financial inclusion, to understand the full ecosystem of stakeholders and to see where sort of the most urgent gender data gaps were in women's financial inclusion. And so as you can see here in this slide, this is the theory of change. Essentially, it's that we believe if policymakers, and here we're defining it rather broadly as regulators, supervisors, as well as other, government stakeholders and sort of actors, if policymakers collect and report gender data, and if they encourage their financial service providers to collect and report gender data, this will, upon sort of analysis, eventually lead to more data-driven policies, monitoring, and more tailored product design for women. And while this, theory of change really focuses on like sort of the key data producers at the national level, in this case, policymakers and financial service providers. We also know that international organizations, as well as, global and regional and national women's financial inclusion champions have very, very key roles to play in terms of improving gender data collection and use to accelerate women's financial inclusion. So in the strategy, we sketched out the ecosystem of stakeholders related to women's financial inclusion data. And as you can see, the primary stakeholders that we identified were sort of the key gender data producers. Here, again, policymakers, regulators, supervisors, and financial service providers, so banks, fintechs, mobile banking, what have you. And what we also tried to do was identify who were some of the key women's financial inclusion influencers on these data producers. So we've listed out multilaterals and donors, international finance institutions and development finance institutions, investors, credit bureaus, banking associations, and sort of other industries. And you can see in the green arrows sort of who has the strongest influence on some of these, the key data producers, and then with the black arrows who have sort of less influence. But mostly we just wanted to, one thing that we determined essentially was that the national level data ecosystem was key to generating the kind of data most needed by policymakers and financial service providers to move to action essentially on women's financial inclusion. So while global data sets like the Global Findex or the IMS Financial Access Survey are incredibly important, what we found in our strategy research was that there needs to be quite granular demand side and supply side data that is sex disaggregated for national level policymakers or financial service providers to take either a policy or a market approach to women's financial inclusion. So as part of the research for the strategy, we created this action journey to identify the different stages in which stakeholders become aware and then eventually take action on women's financial inclusion. So as you can see from sort of the beginning of the funnel, stakeholders, and here we're again talking about policymakers and financial service providers, move through various stages of sort of the women's financial inclusion journey. They start off as being, unaware of women's financial inclusion in general. Then they progress to being aware of gaps in women's in financial inclusion and potential opportunities within their own countries or sort of globally or regionally. They then are in sort of the consider stage. So they're considering making a case or potentially have made a case for women's financial inclusion policy and programs, but they haven't quite been able to take that case to action. And in the action stage, we have, sort of the actual implementation of policy and programs related to women's financial inclusion. And then the final stage, we have sort of championship. And that's when, there's proven impact of women's financial inclusion policy and programs, as well as the sort of active encouraging others through kind of inspiration or best practice or advocacy to also pursue women's financial inclusion. And so one of the things that we did in the strategy was understand what was the role of data at each of these stages in the financial inclusion journey, essentially. And we found, as part of, a series of sort of stakeholder interviews, that the majority of policymakers and financial service providers have not taken action yet on women's financial inclusion. And they're, at least on the policy side, quite a lot of the policymakers are aware of the importance of women's financial inclusion, potentially have even made a case for it, but are actually struggling to move kind of to the action stage of things. They're still stuck in the consider part of the funnel. And one of the things that we found in these interviews was that the lack of gender data to make and monitor policy on women's financial inclusion was a key barrier to sort of moving stakeholders to action. And with financial service providers, a lot less of them actually were in sort of the consider stage, and a lot more of them were still kind of in the very early stages of understanding women's financial inclusion or understanding the business opportunity of potentially serving women and sort of targeting the women's market. And again, as with policymakers, we found that a lot of FSPs struggled with the lack of gender data to sort of move to the next stage. And on the FSP side, we found in particular that, there is a little bit of a sort of chicken or egg question. If you are, do you sort of collect the gender data first, or do you sort of target women first as kind of a client base? And what we've seen certainly is that in cases where, you don't necessarily believe that there is a women's market, or that, you're not invested in kind of closing gender gaps in access to finance, then you're a lot less likely to collect the data. But it gets a bit circular, because if you're not collecting the data, then you actually don't know if you are serving women at all, or if you're serving them well. And I think that that has been a very interesting part of what we have seen in terms of some of the country experiences that we've looked at and some of the interviews that we had with the FSPs, was that the exercise of, sex disaggregating their own internal administrative, in this case, supply side data, almost opened up into this sort of aha moment where by sex disaggregating their data, they realized that they weren't serving women as they had just sort of assumed without the data. And then, recognized sort of the market and the business opportunity, and sort of started, creating, I would say, a market approach to women's financial inclusion. So that sort of was kind of very interesting in terms of what the strategy highlighted on the financial service provider side. And so overall, I would say that it was just, evident to us that data was really critical to move these key stakeholders to action on women's financial inclusion. So the key takeaways from the strategy was, one, that supply side sex disaggregated data has the most egregious gaps in a range of countries, both in the global south and the global north. The second was that granular national level, both demand and supply side data are complementary and both very much needed for a holistic picture of women's financial inclusion in any given country. And finally, we determined that an ecosystem approach is necessary to close gender data gaps, which again is necessary to expand women's financial inclusion. So in addition to this broader theory of change and strategy framework, we wanted to really come up and sort of identify the concrete national experiences that could help inspire other countries or show other sort of, financial service providers how you could actually go about sex disaggregating your financial inclusion data and sort of the benefits that you could reap from it. And so we looked at 5 countries, and they are Chile, Mexico, Rwanda, Zambia, and Egypt. And we published case studies. The case studies that have been already released have been Chile, Mexico, and Rwanda. And the case studies on Zambia and Egypt will be sort of released later this year. And in the next few slides, I will go over a few highlights from our 3 published case studies. And the case studies are also available on our website. So before I get into sort of the specifics of the 3 case studies, I want to say while each national experience is obviously very unique, we also found some very interesting cross-cutting themes across the 5 countries. So the first, again, this kind of practice of documentation is important in the act that it sort of raises awareness. It gives other countries and stakeholders kind of a roadmap for how to move forward. It's inspirational. We have found that, just the sort of act of documenting this work, these countries' work, and sort of putting it out there has fostered a lot of really interesting South-South collaboration and sort of inspiration. The second lesson we learned was that if data is largely a technical issue, then the translation of data into policy is inherently political. So it means that essentially the enabling policy environment within the country is so critical to fostering gender data. So that includes wider gender and financial inclusion commitments of government, usually stemming from the highest levels of the presidency, or sort of, national financial inclusion strategies, as well as gender champions. And we found that, there were gender champions in the regulators, in many of the countries that we were looking at this year, specifically Rwanda, Egypt, and Zambia. You have some very, very powerful.
Angélica, buen día, ¿cómo vas?
You have some very female deputy governors who are really, pushing for the collection and the use of this data. So gender champions are critical. We also, found in certain countries that gender champions were in other ministries, but, we're working with their regulatory colleagues or supervisory colleagues to, again, encourage and show the importance for this data. So yes, the enabling policy environment is very critical. We also found that the collaboration between the various stakeholders in a country working on women's financial inclusion requires very clear and complementary roles. So in some cases, in a country, the national sort of statistics office would take on the demand side survey, but would work very closely with the regulator and the supervisor, as well as usually the Ministry of Finance, to ensure that, whatever they were sort of collecting in the survey met sort of the data collection needs of the regulator or the supervisor. We also found in all of the countries that supervisors and regulators can play a very key role engaging the private sector. And in most of these countries, the regulators did not, the ask for gender data was more of an encouragement rather than a mandate. And we found that the countries were particularly successful in asking for this data essentially when they gave financial service providers kind of a very long timeline to start essentially sex disaggregating their data, when they kind of kept up a constant dialogue with the financial service providers to understand what challenges they were facing, whether it was in their management information systems or how they were recording or not recording the sex of clients at account openings. So essentially this kind of open dialogue and in some ways kind of a hand-holding of financial service providers by the regulator or supervisor in many of these countries ended up being a very sort of beneficial and productive way to actually eventually obtain this kind of gender data. We also found, and I think I said this in the last slide, that both demand and supply side data are needed for a full pictures of women's financial inclusion. So they both really can demonstrate policy success as well as a clear market for financial service providers to serve women through formal financial services. So the great thing about gender data on the demand side is that it shows you the full picture of financial inclusion and financial exclusion. On the supply side, it shows you what happens once women have access to the formal financial services. And sort of, how they can, beyond kind of account access, sort of how can you encourage usage and sort of quality of services and all of that. So very critical and very complementary. And we found that sex disaggregation of supply side data was challenging and that countries face similar challenges. You really need a robust national ID system in the cases that we've found. In countries where there was less of a robust national ID system, it was much more difficult to sex disaggregate existing or sort of, new data sort of going forward. Countries face similar challenges around sort of categorizing joint account ownership, double counting of accounts, and around helping financial service providers understand sort of the definitions of, say, a women-owned business if there was not a set national definition. And then finally, a point that was really emphasized throughout all the countries' experiences was that it was very critical to go beyond sort of gender data collection and analysis to gender data use. And that's the key driver of policy market action. So all of these countries essentially collected this data, but they also analyzed it. They, created sort of annual reports around it. They did, very deep and granular analysis in some cases. And in some countries, they actually held workshops with their financial service providers or other key stakeholders on financial inclusion in the country to say, this is what the data is telling us. This is an opportunity for you. How can we work together? So the gender data use aspect is something that really came out with all of the countries. So now speak a little bit about Chile, and it's a really great example of the power of granular gender data, specifically on the supply side. And when we documented the Chile experience, this was in 2015, it was the only country in the world that has, at this point, collected sex-disaggregated supply-side data from its financial systems for 17 plus years. So the historic data, the level of sort of granularity and the analysis that can be done on this kind of data is really fascinating. And just to highlight the role of the supervisor and the regulator in the Chilean context, essentially what happened was there was a larger governmental effort on increased gender performance monitoring that started at the highest levels of the Chilean presidency. And as part of this, the Chilean financial sector regulator, SBIF, or the superintendency, decided to first sex disaggregate available data, and that was actually just credit data, by using sort of borrowers' national IDs numbers. So they first started looking at the data by actually not asking their financial service providers. They decided to go with the database that they already had access to, and they sex disaggregated the data themselves by matching essentially the national account, the national ID number to sort of sex voter that was eventually cross-referenced with the voter and sort of civil registration civil registry databases. And this was, some very interesting data. So they started ultimately requesting additional gender data on savings, on products from its reporting institutions once it started sex-disaggregating the credit data. And in the Chilean context, most financial service providers were able to provide this data very easily, as the majority of them had consistently reported the sex of the account holder at account opening. And again, they could also cross-reference it with a national ID. But as I sort of made the point in the previous slide, the regulator also worked very closely with the FSPs to give them enough time to adjust to new reporting requests on gender data and answer all of their questions. So I just pulled a few, and then there's a lot more sort of insights on supply side data that's featured in the full case study, but I just pulled a few examples of the kinds of insights that we were able to sort of derive from over 12 years of data analysis. And they include that, in 2014, women actually held more deposit accounts, and these are actually saving accounts, but saving accounts than men. However, if you look at the figure to the right of that, the average deposit balance for women was still significantly lower than men, despite women holding more accounts generally. And the last figure, sort of at the very bottom there, shows, I would say, the granularity of Chilean supply side data. So it allows you to see that in 2014, women hold housing savings accounts as well as term savings accounts, but they had far less sort of pension accounts than men. So an interesting sort of, I think, example for financial service providers as well as the regulator to understand sort of what were the gender differences in particular product uptake and usage. So we also released a case study on Mexico earlier this year with the Inter-American Development Bank. And to start with some background, what was very interesting about sort of the Mexican experience was that they have extremely granular, extremely robust national demand-side data that they have been collecting since 2012, and that's been sex-disaggregated. And they recently, in the past few years, started sex-disaggregating supply-side data. So they're sort of moving towards a very holistic, I would say, data framework on financial inclusion generally, but on women's financial inclusion in particular. So essentially, again, we wanted to emphasize kind of the role of demand-side data here. You can see a lot of trends in overall access, whereas, we get more detail on the supply side from the types of products and services that are reaching women. And the role of the supervisor and the regulator in Mexico, CNBV, was that, they started with essentially a national demand-side survey, and then they started, collecting supply-side data in 2016. And what was interesting about the Mexican context is that we actually found that the national demand side data spurred interest in greater gender data collection from the regulator on the supply side, as well as other government entities such as the pension regulator. So demand side data is incredibly important, but it's not always regular. In the Mexican case, it is. I think every 4 years. But there's essentially the beauty, I would say, of supply side data is that it can be more regular. You can, once you set it up, it's essentially a sort of lower cost once the system is just maintained. And it can give you kind of that detailed look at sort of, access to formal finance that, demand side surveys take a little bit longer to do. So that was sort of the Mexican experience where they started, they got a lot of rich insights from the demand side survey, and they said, oh, we'd actually like to have something that is, more regularly updated, and we'd like to understand a little bit more of, what we're seeing on the demand side and how can supply side data actually verify that. We also found in Mexico, while, there's a lot of issues around cost of national demand side surveys, and I think that costs can be prohibitive for some countries, the information generated is extremely valuable if it's conducted regularly and sex disaggregated. So the CNBV estimated the cost of the demand side survey that they run to be at, basically 4 US cents per excluded person. So the amount of sort of rich data insights that you can get for that, I think makes the cost argument very, very compelling. And on this side, I just have, again, a few data insights on both the demand side and the supply side from sort of Mexican experience. With figure 3, you essentially see, and figure 3 is from the demand side survey. It shows that, men are more likely than women to hold payroll accounts, but women surpass men in Mexico in both saving accounts as well as accounts that are linked to government programs or government cash transfers. In figure 5, and this is also from the demand side, you can see the gender preferences for sort of different types of credit. So women mostly have departmental or retail credit cards, but lag behind men in every sort of other credit category, especially in sort of the payment loans. And the final figure, the average deposit balance, is actually from supply side data. And, CNBV found that men had a higher average deposit balance. And while the figures aren't represented here, the other interesting insight we saw on the supply side from the government of Mexico was that women are more likely to be customers of development banks, as well as banks that are in lower income states, whereas men predominate in commercial banks and holding commercial bank accounts sort of across the country and in higher income states. So again, the granularity of this data is really interesting, both from sort of the policy side as well as, I would say, the private sector side. And we recently released a case study on Rwanda with the National Bank of Rwanda, actually at the the Alliance for Financial Inclusion Global Policy Forum that took place in Kigali last month. And, what we highlighted in the Rwandan context was that the government's culture of data-driven policymaking, so again, some of this kind of performance monitoring, commitment to financial inclusion, larger sort of gender equality commitments, as well as support for data capacity is a really key enabling environment for gender data collection and use. And the role of the regulator and supervisor in the Rwandan context is that the National Bank of Rwanda began measuring financial inclusion in 2008. They also started, similar to the Mexican regulator, with a national demand side survey that was sex-disaggregated. In the Rwandan context, they used FinScope. And FinScope has been conducted every 4 years in Rwanda. It serves as their baseline for policy creation and monitoring. So one of the interesting stories that we saw from the Rwandan context was they first started essentially looking at data on financial inclusion in 2008. They found really high levels of financial exclusion all over the country. And in 2009, they created essentially a savings and cooperatives policy to help reach more rural areas and the financially excluded. And that's known as the SACO's policy, which I've included here. And the next edition of the FinScope, which happened in 2012, actually sort of, confirmed, I would say, the success of that policy. The overall financial inclusion rate of the country jumped significantly, and you saw a huge increase for women as well, who I would say are probably the main beneficiaries of the expansion of these savings and credit cooperatives to the rural areas. So similarly to, again, the Mexican context, the National Bank of Rwanda, had this very detailed, important sort of demand side data, and then they were very interested in looking at something that was more regular, specifically supply side data. So what they have currently done is developed an automated supply side data warehouse. And this is in progress, but once it's essentially up and running, it's going to really greatly increase both regular gender data collection for policy and market use. So there's going to be an analytics component to sort of the data warehouse, and the financial service providers in the Rwandan context are starting to essentially report, and the regulators getting real-time data from the data warehouse. And again, they've worked very closely with their financial service providers to update their reporting requirements to include gender data. And certainly, I think the kind of emphasis from all of the regulators and supervisors in these contexts were that they were very aware of not wanting to overburden financial service providers by asking for more data. So there's been kind of, I would say, a process of almost awareness raising with between the regulator and the financial service provider for financial service providers to understand why regulators are requesting this data, and actually how, by collecting and reporting this data, it can unearth business opportunities and actually be profitable at the end of the day for financial service providers. So I think there's something about striking the balance between not wanting to, overly burden reporting institutions while ensuring that there is sufficient, robust, granular data enough for policy monitoring and the needs of the regulator. So in the Rwandan context, we analyzed some supply-side data that was sex-disaggregated. Figure 6 shows essentially the number and value of non-performing loans by sex between 2008 and 2013. And this was really interesting in terms of, making the business case for serving women. We saw this in Chile as well. But essentially, women are more likely than men in Rwanda to repay loans. And in 2013, the value of women's non-performing loans actually accounted for only 1.5% of the entire outstanding loan book, in contrast to the men's 9%. And in figure 7, and this is again from supply side data, it sort of demonstrates how supply side data can monitor policy. So while we found in kind of the 2012 scope that, the SACO's policy started by the Rwandan government in 2009 was actually successful in closing, financial inclusion gaps generally, as well as financial inclusion gender gaps. This is also essentially confirmed by, the quote unquote hard data from the supply side. So you can see from 2008 to 2017, there's a really significant jump in the number of deposit accounts for both men and women, as well as the share of accounts held by women, especially from 2010 to 2011. And, we said that the jump likely reflects the impact of the SACO's policy. And over the entire period, women increased their number of deposit accounts at SACOs and MFIs nearly sixfold. So while documenting sort of the enabling environment process and challenges, as well as the lessons learned from countries on women's financial inclusion data is a priority for us, we as the WIFID partnership really also seek to document stories of gender data impact and use. So here are a few that we highlighted. So in the Chilean context, we found that supply-side data actually motivated Chilean banks to develop a gender lens. So as you remember, Chile's been collecting this data since 2002, and in 2006, the state-owned commercial bank, Crosscutting, launched essentially a basic account that you only needed a national ID number to open. And the supply side data showed the impact of this account. So the number of deposit accounts held by women grew by 73% in 2006 and increased by an average of 22% in the following years. And following the success of this basic simplified account, private banks within Chile launched their own versions of simplified accounts, and Banco Estado went on to diversify its product offerings for women. In the Mexican context, the pension regulator, once, essentially the financial systems regulator started both collecting kind of demand-side data and supply-side data, the pension regulator was also essentially inspired to collect sex-disaggregated supply-side data. And they found that there was a significant 17 percentage point gap in retirement savings, which then motivated the creation of government programs to promote retirement savings, particularly amongst women, and that included formalizing domestic workers and providing them with pensions, benefits, and insurance. The Rwandan example, again, is the one about SACOs that I spoke about earlier. And the case studies for Zambia and Egypt are currently in development. They will be released by the end of this year, but just two sort of interesting kind of early gender data impact stories that we found from both of those countries. In Zambia, Stanbic Bank, which is a commercial bank, was very confident that it was serving women clients well. But when they actually sex disaggregated their internal data at sort of the questioning of the deputy governor, it showed that women were only 26% of clients, even though their loan performance, as we saw in the Rwanda and Chile context, were much better than that of male clients. So as a result, Stanbic actually developed a women's banking program that targeted the women's market and included mentoring, training, and networking, sort of financial services, as well as non-financial services. And finally, the Central Bank of Egypt started collecting sex-disaggregated supply-side data in 2018, and the gender data reported showed a really significant gender gap in mobile payment use, and therefore an opportunity to reach women with mobile payments. And the Central Bank of Egypt is now encouraging increased mobile wallet use by changing regulations and allowing banks to digitize saving wallets. And the Central Bank of Egypt is also undertaking a national demand survey this year to essentially complement some of their newer gender data on the supply side as well. So as regulators and supervisors work to improve sex-disaggregated supply-side data from traditional financial service providers, there are also new opportunities as well as risks for gender data and women's financial inclusion with the advent of digital financial services. So the opportunity, I would say, is that there's a very interesting intersection between the potential of sort of traditional supply-side data as well as big data approaches. So for example, GSMA has this gender algorithm, essentially, identifier that allows you to more or less correctly guess the sex of, mobile users by looking at sort of their mobile data and their transaction data. So there's this combination between sort of the traditional supply-side data collection, the administrative data essentially from financial service providers, as well as the potential sort of data approaches and analytics. And sort of the increase in fintech and sort of blockchain platforms offer potentially increased traceability of payments. So this could allow for a range of potential disaggregations, not only by sex, but by location and income level and sort of whether they're receiving, cash transfers or government payments. So the potential for this data is significant. But I don't want to sort of downplay the risks or the challenges either. So some of the challenges are sort of identifying the sex of the primary user of mobile accounts. So, often this will depend on the country context of sort of who is registering on whose behalf. So in some countries, like Bangladesh, we found that men often tend to register more on sort of on behalf of women, rather than women directly registering themselves. It's also, more difficult to assess whether who is the primary user of the phone, and sometimes you can tell that with transaction data, but it's not always clear, and we need some, more ground truthing and essentially validation of that. There's also the challenge of multiple regulators when it comes to digital financial services, and of course it's going to be dependent on country context, but in some cases it will either be the financial services regulator, or it will be sort of the telecom or others, but it involves a lot more coordination in terms of the data sharing and sort of reporting arrangements between regulators in the country, as well as regulators reporting up to, say, global level databases like IMF's Financial Access Survey. There are, of course, heightened data privacy and ethics concerns when it comes to anything involving sort of big data, as well as, just looking at sort of users' sort of transaction history and data. So that is certainly a risk. And I would say that another challenge is just sort of the lack of awareness generally that at least we've been seeing from digital financial service providers and fintechs about sort of the women's market. So again, this goes back to sort of the chicken or egg thing. What comes first, the gender data or the desire and understanding that you need to sort of serve women? And we found that it can kind of go either way, depending on the country context and sort of the enabling environment. But yes, lots of opportunities, lots of risks. We, as Data2X, are starting to conduct some initial background research to really understand what the global regulatory landscape and the way forward could be on digital financial services gender data. We see that there is a real opportunity to almost build kind of the gender data aspect in very early on, since a lot of these platforms are new, as well as, they'll have an easier time essentially adding in a data collection field than some of the more traditional financial service providers in countries who are struggling with more legacy, or I would say outdated, management information systems. So there's definitely potential, but we want to make sure, of course, that we are, not exacerbating risks or, doing sort of any harm to, the ultimate beneficiaries of this data, who would eventually hope would be women. And this research, hopes to sort of unearth a few country examples, the potential incentives for digital financial service providers to collect and use this data, as well as any barriers, and if those barriers are different from, what we know of in terms of traditional segregation of supply-side data. So just to conclude, again, data collection is only as impactful as its use, whether for a policy or market approach to women's financial inclusion. So we found by being able to identify concrete use cases, whether of sort of policies, programs, or products that have been successful in accelerating women's financial inclusion, that sort of gets everyone a lot more interested in sort of the gender data issue, right? Once we can sort of point to kind of the data to action link, that's sort of the critical, I would say, argument for investing in these, costly, time and resource intensive sort of data systems and sex disaggregation. We believe that sort of gender data pays, but we need to have essentially these stories and these champions to kind of demonstrate that. We also think that there's a really clear opportunity to expand the knowledge base on women's financial inclusion, particularly through supply side data collection. I think a lot of countries are starting, some very sort of basic and foundational supply side data work that's sex disaggregated on sort of number of accounts and types of accounts. But if we were to go a step beyond that and look at sex disaggregated data on interest rates, which Chile actually did, or for example, SME ownership, could provide really important insights to policymakers as well as financial service providers. And again, just to emphasize this really key role of the regulator and the supervisor in being able to encourage financial service providers to collect and use gender data. And once essentially the collection of gender data is seen as a valuable exercise by all stakeholders involved, they can really use this data to monitor policy and develop tailored products and services that meet women's financial needs. So thank you so much for that. I know that was a lot. I welcome any and all questions, in the chat here, or, we can also feel free to email me or visit our website for additional information. Okay, thank you very much. Oh, I see a lot of questions coming up. So I am going to just jump into some of them. So one question is, in your insights, you mentioned that the translation of data to policy is inherently political. Do you have any recommendations to countries at the beginning of the process of enhancing sex disaggregated data on how to build political momentum? I think that's a great question, and it's something that we've been trying to identify, like what is the secret sauce or the sort of components that are really critical to kind of creating this foundational enabling policy environment. What we have seen is that, in governments that have larger financial inclusion and or gender equality commitments, it's a pretty easy, I would say, jump to kind of specifying kind of the gender aspect of those financial inclusion commitments, or the financial inclusion aspects of those gender equality commitments. So I think that's incredibly helpful. We can't underestimate the importance of what we call kind of global high-level champions. So Queen Maxima of the Netherlands is the UN Secretary General Special Advocate for Inclusive Finance, and gender data has been a really key priority of hers. And she's mostly working on all things financial inclusion, but she knows that we can't achieve global or national or regional financial inclusion without including women, and that she wants to see essentially more data-driven evidence and data-driven policies. And we found that her sort of direct advocacy with, governors of central banks or regulatory institutions, or in some cases with, the president or the prime minister of countries, has started, really encouraging, these countries to start looking at gender data and women's financial inclusion. So I would say that, kind of champions like that who can use their platform are hugely critical. We've also found that in countries where there are, they're receiving, say, World Bank or International Monetary Fund, technical assistance, or, from other sort of development finance institutions, that can be sort of an interesting kind of conversation starter with the regulators. And, I think that there's also something to be said certainly about kind of the peer learning environment. So we work quite closely with the Alliance for Financial Inclusion, and we've seen gender data really sort of expand exponentially since we started sort of working with them. And I think that was partially because they had a few really key members within their network, like the Bank of Zambia, like the Central Bank of Egypt, like the National Bank of Rwanda, like the Mexican regulator, who were very interested in women's financial inclusion, and were looking at the data to back it up. And sort of once other countries were looking at what their peers were doing, whether in the region or sort of in this larger global network, they were then sort of inspired to start seeing what they could do sort of in their own sort of country context. So in terms of the recommendations, I think that there's a lot to be learned from the handful of case studies that we have currently. We're certainly always interested in identifying more, because I think the sooner we have kind of a critical mass of different country experiences, because all countries are at sort of different points in the spectrum of data capacity, as well as financial inclusion, gender gaps, that will essentially offer more or less a playbook for other countries to look at and start really improving their gender data, whether it's on the demand side or side. Yeah, and I think the last point on that question, I'm just reflecting, is I think that there's actually been a lot of really important sort of, I would think, global rhetoric on financial inclusion generally. I mean, I think the Global Findex has certainly helped with that in terms of giving us a very big picture overview of both the global, the national, and sort of the regional gaps in financial inclusion. And I think that there is an opportunity with some of the commitments that are being made at the G20, with sort of the global partnership for sort of financial inclusion, and sort of these other bodies who are now looking at financial inclusion, to make sure that includes women's financial inclusion, and that includes gender data. So I think that there's a larger almost zeitgeist happening with these global conversations that hopefully national level governments or regulators will be able to harness sort of to their own ends, because everyone is at least starting to talk about it. So where we can start moving people to action and then document those action stories, that's sort of the next step, I would say. Second question is, have you encountered any privacy issues relating to data collection that regulators need to be aware of? Yes, I would say that it fully depends on the national context. In some countries, there is a concern that collecting gender data or any sort of sensitive identity data, for example, could be used in a discriminatory way. And what we have found in the countries that we've profiled that have obviously gone through this process of gender data is that they have very, very rigorous data, privacy and security protocols, both in terms of their, say, cybersecurity systems, but as well as, sort of anonymizing this data, who is sort of analyzing it, and ultimately what they're using that data for, right? And that's really, I would say, the regulator and the policy maker to make sure that those data regulations are in place. But that's certainly a topic that has come up often, and that regulators need to be sort of very aware of. In some of the countries where the worry is that gender data, the collection of gender data, could be seen as discriminatory, I think that that's a really interesting issue to unpack, because I think the argument that we're making essentially is that if you're not collecting gender data, you actually don't know if you are in fact being discriminatory towards, say, women clients or what have you. So I think it's also about sort of shifting kind of the conversation to kind of emphasizing, again, the value of this data and sort of, when it's used with sort of the right protocols in a very sort of secure way, and when it's used to ultimately, increase financial inclusion, to better the quality of products and services that are being offered to women, that is sort of the argument that we should be emphasizing, essentially. And I see more questions in the box. Are you able to share best practice on effective ways of what parameters are successful in jurisdictions that have included in collecting sex-disaggregated data from financial service providers? So I think by parameters, and correct me if I'm wrong here, I think that you're sort of talking about sort of what does the actual sex-disaggregated supply-side data framework look like? What are the indicators that are requested or the variables requested to essentially make up the indicators? We can certainly share some of that. We, again, are doing some work on kind of harmonization of supply-side indicators and definitions for women's financial inclusion. And the intention there is to sort of define what we would call a core set of women's financial inclusion indicators and definitions on the supply side, recognizing that, there needs to be sort of variation for national contexts and sort of different, usage of the data. But one of the reasons why we want to define a core set of indicators is partially because we get this question often. There are regulators and supervisors or financial service providers who want to start collecting gender data, but sort of don't know where to start. So, kind of providing a very basic sort of indicator, sort of template or definition might be kind of a good starting point. So that's work that we're doing. There is also, and part of the harmonization work is that there are actually a lot of requests for regulators to report this gender data. So the IMS Financial Access Survey, started expanding essentially what was a gender pilot, but now they're trying to sex disaggregate throughout quite a lot of their indicators with their sort of reporting countries or institutions. And they have guidance. And then if you're in the Alliance for Financial Inclusion, there's also different sort of reporting templates there. If you're a financial service provider who happens to be in the Financial Alliance for Women, you're also reporting to that network. But we're also trying to, align a little bit more closely to reduce actually country reporting burdens and to kind of develop, I would say, almost like a community consensus on what are the key aspects of women's financial inclusion on the supply side that, at bare minimum, if you don't do anything else, you're sort of. So yes, happy to share essentially some of the work on that. And I think that there will be, these are in development, but there's going to be some very interesting, I would say, findings and best practices shared with the Bank of Zambia, as well as the Central Bank of Egypt case studies that will be released later this year, because those were the countries, with Chile, Mexico, and Rwanda, we essentially almost like went in and documented what was already happening or what had already happened. With the Bank of Zambia and Central Bank of Egypt, we were working sort of much more closely with the regulator as they were starting at the very beginning of their sex-disaggregated supply-side data journey. So I would say that that's going to have some very interesting sort of best practices and lessons learned for sort of how you develop this framework. So, potentially even going beyond sort of indicators, but looking at sort of, reporting cadence and, how to communicate this to their financial service providers and how they went about it. The Bank of Zambia in particular did some really interesting work on sort of a first baseline survey essentially with their financial service providers to understand where they were in the gender data collection process, and if they could even sort of report some very basic indicators on women's financial inclusion before sort of, really changing some of the reporting framework. So I think that there's going to be some really interesting sort of best practices from there. Okay, there's another question on, you mentioned Mexico's cost of collecting data was low. Is this a major concern of FSPs? In your experience, how do regulators address this question? Yes. And so just to clarify, the cost that I mentioned in the Mexican context was around sort of running this national demand side survey. It's extremely granular and provides like this very, very robust data that is sex disaggregated. And I think the point I wanted to make by including that was that we hear a lot that countries are a little bit hesitant to run national demand side surveys because they are seen as costly and time intensive. But I think from sort of the Mexican experience, we see sort of the real benefit of running this national demand side survey and sort of the information that you've gleaned, about these key kind of excluded groups and populations is very important. So that was sort of the point on sort of the Mexican context. In terms of the concerns of financial service providers that we've seen, there is a hesitancy sometimes in terms of overhauling or updating some of these, again, legacy or historic management information systems that aren't currently collecting, the sex of sort of account holders. For a lot of financial service providers, they actually track their data not by client, but by product. So it's also very confusing to understand if one person holds sort of 12 different accounts at a financial institution, because a lot of their data in financial service providers, and this is not the case for everybody, but traditionally it's been pretty siloed. So for a lot of financial service providers, it does require a little bit of, essentially refining and updating their own data collection systems. We do believe that in the long term, this is, a benefit to the financial service provider themselves, because with, better data, with their own sort of better internal administrative data, they're actually able to use that data again to kind of create, or monitor sort of how their programs are going, or sort of look at, where there are opportunities and gaps in their current portfolio. So I think that we've seen that, the cost, it's both the kind of financial cost as well, I would say, like the awareness raising and kind of staffing and sort of human capacity question that comes up with financial service providers. So when you're overhauling, a data system, you really have to train all of your account managers or sort of whoever's doing kind of the data tagging, understand sort of, again, why you're doing this, but also sort of how this works. So like in one country, there was some confusion, and this is a Spanish-speaking country, because there was M, and essentially M could be either tagged for sort of male or mujer, which is women, in Spanish. And so there was a lot of confusion and a lot of, I would say, data validation issues, because there wasn't, I would say, adequate training of some of the financial service staff to understand exactly what tag they should be using sort of for which client, for example. So things like that. I think it is a longer process. What we have found is that where financial service providers, whether it's through, request or encouragement by the regulator, or sort of, they're in kind of a larger kind of peer learning network like the Financial Alliance for Women, and they're starting to kind of get requests for gender data. Once they start collecting it, there is kind of almost like an aha moment where the time and the effort is worth it, because the amount of actionable insights that they can glean from this data, once it's been, sort of quality tested and validated, is really helpful to their own sort of bottom line and their business. And I think that, in our perspective, we think that women's financial inclusion really requires a policy and a market approach, and that data is kind of the key intersection of that.
Hi, Stephanie. This is Demet again. Wanted to thank you very much. This was great, so insightful. We learned a lot. I believe webinar participants also enjoyed. We received some good comments. And thanks again for your time and presentation. Let's keep in touch. Thank you everyone for joining today's webinar.
Thank you so much for having me.